Good evening, everyone. Welcome to the podcast of Nimbus Capital. And in this session, I'll be going through a little bit of analysis on the Straits Times Index, which is, of course, the Singapore market. So I'll be going through pieces of information here and there to kind of let you know what are the market that we are kind of into and what to expect, and what are the companies or the counters that you can look to trade during this period. And of course, this period is actually I will consider it quite bad, because for the from the past almost 2 to 3 months, right, we do have the market kind of in a stagnation mode where nothing seems to be moving, which is very apparent from the chart itself. If you look at the STI chart right now, right, market has been stagnant since like the early March period and throughout all the way until currently right now. But of course, this movement have to be expected, as price we are now back in the pre-COVID level. So during 2020, before all the price crashes due to COVID-19, right, we do have consolidation at the similar level here, which you can see. So when the price returned to the previous level of consolidation, right, it is kind of expected that price would not kind of like move past that area immediately, move past that level immediately, because there can be sellers and buyer present in that area that is willing to trade, and price can be distributing or it can be accumulating. We don't really know, but price will bound to get consolidated in that same area. So this is I would say technical analysis 101. So I don't really need to go through so much about this. But what is surprising is that even though the stock market price, we are back in pre-COVID-19 level, right? It does seem that the current COVID-19 scenario is not actually improving. We are still back in heightened status. I think phase 2, or I can't even remember what phase we are in, but it does seem that things are still not improving, because previously we were about to go into phase 3, and for a short period we were able to have 8 visitors, or we were able to dine out with eight people, but right now we are back to 2. So it does seem that on that front, things are not improving. And of course, the daily COVID cases, we have about more than 2,000 cases daily right now, which is worse than what we have during the whole dormitory cluster case, where we have 1,600, but now we are even double that. But despite that, you can see that market is not really responding to any kind of COVID-related news. And in fact, if you look at all the counters that did extremely well during the COVID-19 period, the earlier stage of the COVID-19 period, for example, MedTech International, Riverstone, the glove counters, UG Healthcare, and maybe even Sheng Siong. So these are what I will call the COVID team counter. And just by looking at the performance of these counters, right, you will also realize that they have actually fallen extremely low, about 82% from its high. So they were only doing great during the initial phase of the COVID-19. After that, even when COVID-19 get worse and worse, right, they are not really going up or responding to the current COVID-19 scenario also. So my current advice is that don't try to go into this counter because COVID-19 situation is getting bad to worse. It does seem that market have already went past that particular theme, went past that trend already. So the trend of all these medical counters is over. So it's no longer worth the chase, because when you are chasing this kind of trend, this kind of chart, right, you have to know that a lot of people bought during this big uptrend. And when price start to go down, right, it doesn't necessarily mean that everyone is selling. There can be a lot of sellers stuck here, or there can be a lot of sellers who continue to hold on to their position, hoping that it will recover, but it doesn't. So now maybe you have sellers that are stuck somewhere here or here that are waiting for price to recover just so they can sell and they can get off the counter. So to summarize, the COVID-19 theme is over. So don't look for counter that were very, very great during the initial phase of COVID-19. In fact, this is one of the biggest reasons why I would say being able to trade short term is a very, very valuable skill, because if you are an investor and if you look at counters like MedTech and you see that, wow, the revenue increased by more than I don't know how many 1,000% during the early 2020, and then you do all your fundamental analysis and then you realize that, okay, this company doing well, doing extremely great, and then you buy into this counter, for long term or whatever, right? And what you realize is that after that first trendy phase, the first initial phase of the hype, things just start to die down. And even right now on paper, the fundamental might still seems very good. What you have is a dead counter, a counter that you are most likely stuck. So that is where being a trader sort of have its advantage, where we can actually enter. I wouldn't say we will be able to catch the bottom, but we can enter somewhere midway along the trend when we start to see a very, very obvious uptrend, when there are higher lows, when resistance are broken, and we can exit somewhere before it start to turns all the way down. Of course, there's no way we can exit at the top, but we can exit somewhere like here, which is still, I would say, a very, very good enough profit that you can get from the counter like this, where there is a hype and there is a trend. So, and you are not stuck holding this counter throughout all this year, hoping that it recovers. And whatever cash, that profit that you manage to get from this trade, right, you can put it somewhere else for better use, like you can put it into some other trade. So I believe that is where being able to trade in a short to mid-term is a very, very valuable skill. Also, of course, doing long-term investment is definitely fine, but why not both? Why not both? Okay, so this is to say that counters like MedTech, Riverstone, all these are we are done with these counters already lah. So currently, right now, in the current stage of the Straits Time Index, right, you will notice that we have a very strong support. A support that was established here. Sorry, I don't mean to say strong, just a normal support that is being established right here. That is about 3,000 plus, very close to 3,000. Let's take it at 3,050, 3,050. And now price is coming back down to retest this level, retest this support. So you do have to be careful, because this is not really a support. It's just one big uptrend, and it just happened to be a gap here. And this support just happen to be at the gap there also. So I would say that this is more of a coincidence rather than stating a blanket statement that says every gap can be a support or something like that. That's actually not true, because you can see that in past scenario, price can actually go down below the gap to the previous price level before it start to recover. And in this case, right, I would say that this price level 3,050, it has been only tested one time. So you might be thinking that, okay, now that price is back to 3,050, right? Previously it was supported. So maybe you might be thinking of buying into STI at this current range. But I would say it is slightly dangerous, because currently it is still hovering at the price. Hovering at the price doesn't mean that it is being supported. It is just hanging around there, sort of testing the market to see whether are there any buyers or not. So as a seller, right, when you want to sell something, you want to ensure that there is really no buyers in the market before setting your price cheaper before selling something cheaper. Let's say you have an iPhone 12 that you want to sell off before iPhone 13 come out, and let's say you want to sell at 1,000. So when you set the price at 1,000, you will hope that someone buy the iPhone at 1,000. So you just put it up on carousel for a period of time, and maybe after 2-3 months you realize that nobody is buying, then you will set it lower to 800, 700 or 600, whatever the price is like. So in the real market, right, the price tend to do that. When it reach the support level, it doesn't immediately rebound, or it doesn't immediately dive down. It just stay there for a while. It just stagnant there for a while, because the market is testing to see if there are any buyers, if there are any sellers, are there any takers at this current price before we push the price down or we push the price up. And sometimes it is what happening right now. I can say that that is what actually happening right now. So it doesn't mean that price is supported and you can buy and then the whole thing will go up. No, it can mean that buyers are just testing the market to see are there any seller, or sellers are testing the market to see are there any buyers. So whether if there are overwhelming supply or if there are more demand or more supply, we don't really know. It is still a question mark. It is just testing. So one of the common mistake most traders make is that when they see a support and the moment price hit the support, right, they just buy immediately, but only to realize the support broke down or something like this. So a much, I would say, a better approach to treat this is to wait for the price to show itself, wait for the price to show its direction first. So in this case, you see that there is a consolidation happening within this area. Price is like congested here. So meaning there's some consolidation taking place. And until the price is broken up or broken down, if price has broken up, right, then we can assume with higher probability that there are more demand than supply. Or if it broke down, we can assume with a better probability that there's higher supply than demand. And of course, if this happens, you might not want to place your long position ready. You might just want to kind of like stay away from the trade. Or if you are adventurous enough, you can even place short selling. If you are on the long position side, then maybe you will want to wait for this kind of movement. So by waiting for some kind of confirmation to appear first, right, what you are essentially doing is you are giving yourself a higher probability on your trade, because more often than not, trader tends to bottom pick this kind of thing and then price just goes all the way down. So in this case, you might not get the bottom. You might kind of like give up this little portion of your profit should the price come up to your previous resistance level, right? But at least you get a better probability in terms of hitting your target or getting the profit in your pocket. So that would be a much better approach, and that is what I am looking out for currently right now also. And another thing I want to also point out is that you can see that previously, before price goes all the way down during 2020, this is the highest point. This is the last known high before market goes all the way down, and now we are resisted at the similar level. So we are kind of resisted at a similar level. So you do have to be kind of mindful that if you decide to go for a long position, then you might get resisted at the similar level. So is it possible for this resistance to be broken and for market to go even higher? I believe it is possible, but there need to be some kind of catalyst to trigger this. And since we are already out of the COVID-19 phase, right? The hype, the COVID-19 stock market hype, we need something else. We need something else that is no longer tied to COVID-19 to give us this boost. And it can be things like the air travel being open. Also, although air travel open can be still argue that it is linked to COVID-19, right? It is not directly linked to medical supply or the pandemic itself, but rather the surrounding industry that were being affected by the pandemic. So we probably need something like a very clear-cut phase 3, very I would say a clear indication that we are going into phase 3 for good and we will remain there, or we need the air travel to start to open up, then that could be one of the catalysts if you are on the bullish bias. I'm not really sure about any other catalyst that can be good enough to push up the market price, because even then, even before our previous COVID-19 phase, right, the market is still kind of quite bad before it start to fall. But right now we are back in same scenario, but with the COVID-19 restriction, and also it does require a big higher push. So if you look at Singapore stock market in general, right, we are heavily weighted towards real estate, banking sector, and I would say properties. We don't really have technology sector, although we are considered one of the more highly advanced country in the Southeast Asia, right? It is quite a pity that we don't really have any technology counters that are listed in the Singapore exchange. Of course, we do have things like Nanofilm, or we do have things like Venture, but these are not really what I would consider true technology. What they do is they are more towards the manufacturing side, where they innovate and they manufacture electronic technology components, semiconductor. So not really technology counter like Facebook or Amazon, companies like that, which is quite a shame, because given that we do not have a lot of raw material, a lot of land space, not even a lot of I would say workers to support all these kind of big manufacturing operations, right? I would expect a lot of technology companies to be here, but sadly, it is not the case with Singapore. So if we look at counters such as the banking sector, right? Actually, I would say that the banking sector is what currently holding up the STI right now, the Straits Times Index. So DBS is still doing quite well at the moment. It hasn't really retraced any substantially yet, but you can see that it is kind of struggling to maintain at its high there, and it is slowly pacing up. And we also have the previous resistance that was here, and of course this resistance now is definitely tested. We hit it and then we come back down. So it doesn't seem to be looking quite good for DBS at the moment also. And even if DBS managed to go further up and hit go past the resistance, right, we do have a lot of, I would say, freeloader in the XTI that are pulling the entire index down. So these are the freeloaders are probably counters such as Keppel. Keppel is a very, in my personal opinion, a very bad counters lah. So while there will be a lot of folks who are defending Keppel, right, I do look at things on a very technical basis, and given the state of Keppel, right, we are very far from what the glory days were, where we had Keppel at $10, $12. Now we are half the price. And one of the reasons why Keppel is in this state is because it always finds itself in a situation where it is buying out companies that are doing very, very bad. Previously, we have Keppel and SPH have bought M1 out. After that, Keppel is trying to buy out Sembcorp Marine. And now Keppel is trying to buy out SPH itself. So it is loaded with a lot of subsidiaries, a lot of companies that are not doing well. But I think what Keppel is just a public company that is in the interest of the government. They are just there to ensure that they provide jobs in, they keep this company alive, and they keep ensure that there are jobs that are in all this industry, so that the entire Singapore job market doesn't fall apart, which I believe is a good thing. But when you are looking at it from an investor point of view, as a trader point of view, right, that is something that you would want to stay away from, because there is a conflict of interest. Because as an investor, as a trader, you want the company to do well, you want the company to kind of put profitability at the higher priority. Of course, if you there's no wrong in saving jobs or what's not, but these are usually not public company. They are more of like government companies, or more of private companies, where they are able to do this kind of things without hurting the shareholders. But as a public company, right, maybe this is not the best kind of option that you will want to go into if you are looking for profits. And similarly, we have Singtel that have not been able to recover at all since its $4.50 heyday. So we have achieved the top during 2015, but ever since then, we are no longer able to get that kind of price. Along the way, I also think the Mapletree, the Mapletree trio, the logistic, the industrial, and I forgot what the other one, the REITs, the REITs component of the STI, they are also what I believe to be keeping the STI up, because a lot of local investors love dividends, love very, very high dividends. And it is because of these high dividends, we have a lot of, you can see that counters like Mapletree are still holding up quite well, even though Keppel DC rate has started to fallen down already. Even Mapletree have started to come down already, but they are still somewhere near their all-time high. So aside from this counter, you will realize that majority of the STI, right, they are majority of the STI components, they are not really doing very well. So as a trader who want to be involved in the Singapore market, right, I do highly suggest that you refrain from entering any counters that is part of the STI index itself, because currently the kind of industry that are thriving, it is nowhere in the STI, the Straits Time Index. So what are the current counters that are actually doing quite well right now? So for some reason, because I'm not really strong in the fundamental perspective, for some reason, in the recent past 1 or 2 months, there is a trend that is showing up, and the kind of counter that are doing quite well is, surprisingly, the coal industry. The coal industry is doing quite well, not just in Singapore, but across the world. You have a lot of mining companies in US and Hong Kong. Even given how bad the Hong Kong market is right now, you do have some Hong Kong counters that are in the mining industry that is actually hitting 52 weeks high. And of course, in Singapore, we do have a few mining counters, and the most I would say a well-known one will be Geo Energy Resources. So Geo Energy Resources, as you can see here, right, we have gotten very, very high from its previous low during 2020 May. So if you want to go back all the way from 2020 May low, right, we are actually more than 300%. We are up more than 300%. In fact, we are revisiting this previous resistance, which is this one at 375. But if the price is able to breach through this resistance, right, we will be looking at the previous all-time high at 60-cent level. This level is very, very possible if you are able to sustain this uptrend and able to hit that particular price level. It is very possible. And in fact, for Nimbus Capital, we do have trade setup on Geo Energy Rest. Let me find that particular trade setup. So we did took up this trade setup some time back in 12 May. We did took up this trade in 12 May. And of course, if you are doing any kind of trailing profit or what, right? You will be still holding this counter until right now lah. So of course, we will be looking out for additional entries, additional trade setup for Geo Energy Resources again. But this is to show you that this counter is within our radar. We have the first trade setup already. The moment we have the first trade setup, this counter will be in our radar. So we are kind of closely monitoring this counter. And of course, another set of counters that are doing quite well is not just the coal industry, right? Anything to do with mining, oil and gas, the energy industry, agriculture and energy industry seems to be doing quite okay. So if you look at Golden Energy also have recovered very, very nicely from its low. And once again, we also have Golden Energy in our previous trade. It is one of the trade that we have taken way back in July. And I think we also have a current trade ongoing on the 25th of August. And I believe that trade is to be somewhere here. So although we were stagnant initially, right, we are kind of in a very, very good green right now. It is trying to test the previous resistance. Aside from that, we also have, as I mentioned, the agriculture industry, Golden Agri Resources, we kind of recover quite nicely, but this chart, it doesn't look as nice as Golden Energy or the Geo Energy Resources, mainly because it wasn't able to break previous resistance yet, whereas you do see that Golden Energy, we managed to break through here, or this previous high. And for Geo Energy, of course, we managed to break through all these high here, but for Golden Agri Resources, we are kind of still faced with a resistance here. But nonetheless, you can kind of assume that we have a higher low. We have a higher low that is being formed. So the question now here is that whether it can sustain its uptrend or not. So if we are looking at Golden Agri Resources, right, I think First Resources is something that is good to look at also. We does have a very, very good recovery from sometime like July like that. We are able to break through this resistance here. Currently, what we have is that it is most likely to be resisted here. And aside from the energy industry, right, as I mentioned, we also have the offshore oil and gas industry also seems to be picking up. We have Rex International, which we previously have trade setup on. We are still holding that particular trade setup. We breached through this high. We managed to breach through this high, even though recently it dropped, but it managed to stick to this particular uptrend and it start to go up. So you can see that a lot of these very, very old counters that were stuck for like 5-6 years. So for example, you can see Rex International hit its low sometime in 2015 and it has been stuck there ever since, until recently you see a price movement, a very, very good price movement coming in. So yes, you can see these counters kind of waking up. Similarly for Golden Energy, also this counter have been stuck for quite some time since like this entire portion, and now it is waking up. And we also have Kim Heng. That is in the oil field service equipment industry. Also seems to be waking up, but of course, Kim Heng has a bit of resistance to overtake. But if it manage to overtake this, right, we are looking at very, very good uptrend that will be coming in also. So aside from this industry, right, we also have the electronic components, the semiconductor industry in Singapore, which are doing somewhat okay. So we have Grand Venture. Grand Venture is one of our star counters in Nimbus Capital that we able to have some trades from 60 cent or 50 cent level all the way until now. In fact, we have a current trade setup that is running. So it is recently, right? It is just kind of stagnant here, along with the overall broad market. So we are kind of waiting for this to go up. But if you look at Grand Venture compared to the likes of Singtel, Keppel, Riverstone, MedTech, right? You can see that Grand Venture is definitely a much better looking chart, and you will be preferring to invest in this kind of chart or trade in this kind of chart compared to those that have fallen until the point of, I would say, no recovery lah. And back to the oil and gas energy, right? We can kind of expect why they are doing well also, mainly because oil price has been going up recently and it has broken through the very crucial resistance here, very crucial. And this resistance was retested 2 times. And in fact, after the first time it reached this high, right, price actually go all the way to negative before it start to recover to reach the current high it is right now. So in fact, all price are looking very bullish, and I'm not sure if we'll be able to hit back the previous high around 100 to 90 to 100 level. And in fact, this whole price drop for oil and gas, right? From crude oil, from 2014 all the way until like 2016, where we have a huge drop in the crude oil price, right? It is one of the contributing, if not the factor, where we have that drop, that this big drop in the market also. So during 2015 to 2017, like that, right? We have a very big correction, and this correction is extremely obvious, extremely visible on a lot of I would say charts. So if we look at S&P, right, you can see that during 2015, during this period, we do see market drop quite substantially from its top, about 13%. Of course, for Straits Times Index, we drop a lot more. I think we drop over 30% like that. 30% like that. I think it's a little harder to see on the S&P because this is actually a CFD. But let me look at the Dow Jones. I think Dow Jones, you might be able to see a better, I would say, a better. Now the data only shows until here, so I'm so sorry I can't show you the data during those period, but somehow it is visible on the STI. Okay, so sorry, I played. So back to the electronic, right? We do have counters such as UMS, which is doing extremely well. It has broken the previous high, and it is on a very nice uptrend. We also have Franken. It has been doing quite well until today, where we have a drop. But even then, it is still a very, the uptrend is still maintained. The uptrend is still very structured and maintained. So if you do see any bullish counter coming up, maybe this is the counter that you might want to look at also. On the other hand, you have the very speculative, more of crypto based, crypto theme stock, which is OIO. We have a trade set up previously, but we kind of missed the TP. Our TP was here, but we missed it by a bit, and it continued to drop and hit our stop loss. So, but currently it does seems to be recovering again. So although I would say I'm personally would not endorse this counter, but if you are into a little bit of pumping mood, if you are in a bit of speculative mood, right, maybe this is something that you can go for also. So just to summarize, right, in Singapore market, definitely things are not as exciting as the US or the Hong Kong market, but we do have a lot of counters that are still in a very strong uptrend, that are still doing well. And in fact, if you look at my previous blog post, you will see that there are quite a number of counters that have more than 100% return in 2021, despite the fact that the STI or the broad market in general is pretty much stagnant. So there are opportunities here that you can find, provided that you are looking at the right place. Of course, if you keep looking at things like Keppel and SIA and Singtel, Keppel DC REIT, Mapletree Logistics, Sheng Siong, the obvious counter, right? If you keep looking at all these obvious ones, definitely you might not be looking at the right place lah. but I hope that this video kind of widens your view and give you access to a few counters that are listed in Singapore, which you might not aware of. So I'd like to end off this particular podcast by sort of saying that do visit our website, Nimbus Capital. We will link it in the description, and we have a Patreon page where you can subscribe. It is on a monthly subscriptions basis, so it is very cheap. It's about $20 USD a month. It's in USD because Patreon is a US platform. They only deal in USD, so I have no way to make it SGD. But it costs 20 USD to subscribe per month, very, very cheap. And you will get a lot of trade setups, you will get a lot of weekly webinar and a lot of other interesting topics that I will share from time to time, including this kind of videos or this kind of podcast lah. So if this video interests you, then do consider visiting our Patreon to sign up for it. And to end off, I would like to say that the market in general right now, we are still in the extreme fear mode. So there is no rush to go into the market right now, but you need to be extremely disciplined and you need to be very, very clear with your trading system to ensure that you can survive this kind of stagnation. When traders are not confident in their trading system, when traders do not back test or forward test their trading techniques, right? When retracement happen, they get panicked. They suddenly feel that whatever that they are doing is no longer working, and they start making very, very emotional decisions such as prematurely exiting, revenge trading. So all these kind of losses usually stem from emotional decision. So it is very important that you are very, very clear and very confident with your trade system. And with that, right, I would like to end this podcast and thank you all for listening in.